the impact of Brexit on the economy of Mauritius. Briefly, the contents of that short presentation. Some basic facts and figures on the economic relationship between Mauritius and UK. Then the possible impact, some positive ones and a lot of negative ones. Number 3, we'll then have a look at the future trade regime of the UK, because nothing is known for the time being. There are various alternatives. Then possible consequences for Mauritius, and try to close with some proposals of strategies for Mauritius. I hasten to say that the data I have obtained are from Statistics Mauritius and from the Bank of Mauritius Statistical Bulletin, and also I've obtained a lot of information from the publication, last week it was, by the ODI, Overseas Development Institute, on Brexit and the UK and what are the various alternatives ahead. So the economic relationship first. Exports of goods. You will see so the figures there, but in 2015, we exported for nearly 11 billion rupees, 12.6% of total exports by Mauritius. To note that 4 years ago, the percentage was 20.3%. So there is some sort of a downward trend, but it's still not insignificant. It's also interesting to look at the exports to the European Union, including up to now the UK, because it is believed that this divorce will not be without consequences also for the European Union. But for the time being, we note that our exports there are over 1/3, 38.5% in 2015. But there again, we note some sort of a downward trend because in 2011, 4 years ago, it was more than 50%. Next item of interest, economic relationship is tourist arrivals. In 2015, about 11%, and it had been the same the year before. So we note, therefore, that this is again not insignificant, and that in fact the tourist arrivals from UK have been progressing at the same rate as the tourist arrivals from all over the world. There has been a lot of progress in Mauritius, and UK has followed. So this also is of importance. A third item to be of interest is foreign direct investments from the UK into Mauritius. You have 4 years on the screen. The first line gives you in billion rupees the total FDI from all countries. And as you know, FDI has been going down here since about 2013, and in 2015, I think it's going down much more. But what we note on the second line of the table is that the EU, or the third line of the table, that FDI from the EU is important, more than 50% or nearly 50% during those 5 years. FDI from Europe is therefore significant. Now, within this EU, what is the share of UK? This is the last line on the table, and you will see that in 2011, the UK provided 18% of total FDI, 2012, 20%. Then 2013, 14, it goes down. And in 2015, it seems to be going up a little bit. It's erratic. It's erratic, but all the same, we do have FDI from the UK, we do have FDI from EU, and should there be problems in the EU, even without, and in the UK, this could have some effect on FDI into Mauritius. So, very briefly, these were the basic facts. Impact, possible impact, positive. We import about 2% of our total imports are from the UK. So with a fall in sterling, we can expect these to be cheaper, but it's only 2%. The price of sugar has gone up recently. I think there is some less supply at the moment, so this has nothing to do with Brexit. But I think that the fall of sterling also did cause some problems there. There has been an increase in the price of sugar, and as I note here, it went up. Sterling went up. Sugar went up by 8% between June 23rd and July 1st. But this, I fear, will be maybe short-lived. But for the time being, let's benefit from it in this, perhaps in this 2016 crop year. The negative ones now. One can expect or should expect, if there is a recession in UK, as many are saying, are expecting, there could be a lower UK demand for our exports, which, remember, is of the order of about, I said, 12%, I think. So why would there be this lower demand? Not only because of a sort of recession, but because this value, the fall in the value of sterling gives rise in the UK to a negative wealth effect. The fall in incomes, which has been predicted, a recession has been predicted by the Bank of England, can take place. And of course, with all this uncertainty, changes in expectations. So one could imagine less interest in importing from Mauritius and less interest in going to visit Mauritius. And FDI also could suffer therefrom. What is more is, as ODI has pointed out, there is no investment bank in the UK. It works with the European Investment Bank. Now, if it leaves the Europe, it probably eventually will have its own investment bank, but this might take some time to happen. Again, this could have a negative effect on FDI into Mauritius from the UK. Further negative possibilities. I fear that if sterling remains on the low side, that Mauritius will have no alternative eventually but to let the rupee go down, depreciation, in order to correct the fall in export proceeds, not only of sugar but of textile products, etc. This will, of course, widen our balance of trade deficit, which recently has been doing well because of the falling price of commodities, but this will not last. So, and of course, if we let the rupee go down, that means higher import costs. As you know, our majority of exports are paid for in USD. The same DEX might be affected if foreign portfolio investors sort of look for safe haven assets in this period of heightened uncertainties. And there I wish to quote this point from Reuters. 210 million USD have outflowed from emerging markets since the Brexit vote, as compared to only 25 million USD following the Chinese slowdown. Just to show, therefore, the very strong shock created by the Brexit vote. So where do we go from here? What types of trade relationship between the UK and Mauritius? Let us first look at the possible outcomes between UK and EU. I have listed A, B, and C there, basing myself on the ODI report. A, the UK retains access to the EU single market. B, the UK retains this access and also the customs union. Same droit de douane, same customs duties as Europe. Or C, the UK adopts a trade policy of its own in line with World Trade Organization principles. What would be the effect? Under A, the structure of imports from Mauritius, of import demand from Mauritius, of Mauritius goods from the the structure of import demand of Mauritius goods from the UK unlikely to change significantly because the UK remains in the single market. Under B, better still, as it practices the same duties, the same customs duties, so there is not much change. But under C, that's where the problems arise, major adjustment expected in trade structures and consumption patterns in the UK, because now you are dealing with a totally different system. So what are the possible consequences for Mauritius under outcome C? Then we would be finding ourselves supplying to two different markets. One market being the EU without UK anymore, and the UK, with possible divergences in product standards and resulting in higher compliance costs. There might be supply relationships which have been established with European-wide retailers, and these will now maybe affected. But of course, on the positive side, there might be new opportunities through possible substitution of Mauritian products for those previously serviced from the EU. It's a possibility. But the ODI does mention, we thought it was important to mention one thing, and that's of interest to us because we also sell agricultural products, including sugar, or mainly sugar. In the case of agricultural products, it says, it is likely that large developing countries, which excludes us, or other developed countries, which excludes us, will be the main beneficiaries. That's their point of view. So, in the light of all these various possibilities, a few positive, many negative, what's our position? What can we do? I would like to suggest that the key word is diversification of both our products and our markets. And indeed, this is what we have been doing for the last 40, 50 years. We have been diversifying from primary to secondary, from secondary to tertiary. We have been, for markets, we have not been as good. We have been very, very European-centric, but now we are seeing that for tourism, we have at last understood that we should not be just European-centric. So it seems to me we must just have to continue, including the financial sector. With India, well, we will probably be being forced to do that, the circumstances. So diversify products, diversify markets. And I would like to suggest that we also apply these principles of diversification to the EU. And as we see, our exports have already gone down to the EU. So we have to continue that. And because I would like, again, to quote ODI here, it's quite a tough sentence, that's their point of view. The EU may face an unknown period of disintegration, instability, and rebranding. We hope it does not happen, but this is what these people at the ODI think. So there are risks ahead. So where do we stand? What do we do? Looks as if we must strengthen our regional ties. SADC, COMESA, we're always talking about Africa, African countries. We all know this is very difficult. These are difficult markets, but there are success stories also. So I have to continue in that point of view. Deepen the hub concept, particularly as regards air connectivity and financial cross-border activities. And of course, above all else, above everything, we have to be competitive, which means improve, and God knows if we have to improve productivity of capital, of labor, of management, of everything throughout the economy. We have to improve productivity. Now, if we succeed in doing all this, shall we succeed? Shall we be successful? Let's hope for it, but we have a major geopolitical hurdle I would like to suggest. It's the Diego Garcia issue. And will David be in a position to defeat Goliath? David, 13 US billion GDP, Goliath, 2,700. Thank you.